JV Cycles with an update on March the 30th. So a pullback is coming. I still think there's a pullback coming. You know, we have this trend line and we can't stay forever above this steep trend line. We have to break it and there will be a reaction to the downside. However, this still is a very strong trend, and I don't think we will have any big correction directly after such a strong trend. I think the first pullback will be bought and then we can have a correction after making some kind of a topping formation. So I'm still not sure if this 4-week cycle has shifted or changed. We had these strong solar flares that typically can change my cycle, and when switching to the Dow Jones hourly data, it's confusing. I'm not sure how my 2-week oscillation is aligned right now. I have two alternative versions and I really don't know. We had some disturbances also back here. We had, you know, the Nvidia earnings. The market was hesitant, and we had the Fed decision, and news related stuff can override the cycle, and after a while the market will come back in phase with the cycle. So I'm not sure if we have a temporary disturbance or if the cycle actually has changed. Also, looking at the 10-week cycle, it looks more and more like this actually was a 10-week cycle low. Meaning we have started a new 10-week cycle, and I think this one will be more it will be weaker, maybe more left translated, possibly making another topping formation here. So maybe something like I have drawn here. And very short term, looks like could be a little bit more upside early this next week, and then we'll see if you are looking for a 2-week oscillation low around Wednesday, or if the low is later. I'm not sure how these oscillations, which one is correct. So sorry I cannot be to any more help than that. So the S&P daily data wavelets, it's a tricky situation. In this low volatility, strong trending market, my wavelets, they get confused and they don't give me good signals. I think this could be a bigger wave or a cycle containing of 3 10-week cycles ending with a bigger correction here. And then we start the next leg up. And I visually from this point I cannot see a good setup for anything, but there's a problem. If we look at number of trading days staying above the 20-day moving average, we see the current situation we are at 50 trading days. So, you know, odds favor we need to break below the 20-day moving average. You know, going back 30 years we see we can rally much farther than this, but odds doesn't favor it. And is that all? No. If we look at the 50-day moving average, so we are 100 trading days above the 50-day moving average. You know, we can rally much more than that, but odds doesn't favor much more. So yeah, I think we need to break the 20-day moving average. That should be, let's see, the white line here. Doesn't take much to break that one, but maybe we stop around that level. We break the 20-day moving average, we break this trend line, but then we have another squeeze to the upside, perhaps making a bigger double bigger double top, and then we get the correction. That's a possible scenario. So 10-week cycle. This could be the 10-week cycle, and could be that we have started a new one and are looking for a low sometime in May or June. And the bigger picture. Many months ago I said I thought this bull market would be a big ABC bull market. And here I compare with some bull markets from the 1960s and 70s that I think can be relevant. So the current bull market in black and the average of these three others in green. And we see we had the current bull market A going up to July last year, and then we had the B going down into October, and this B wave down came a little bit earlier than I expected. I didn't thought this would be the top. I thought that the A top would be a little bit later here. Anyway, we should now be in the final C wave in this bull market, and I think this C will be like it will be the C will be an ABC. Well, that gets confusing, but this whole bull market I think will be a big ABC, and the C will be a smaller ABC. And yeah, it gets messy. So anyway, I think we are looking for a correction here in April, May, June, here somewhere, and then we get the last leg up. And the bull market top can be messy. It could be a longer sideways topping formation, and we see from these three analogs that this top could be starting around September, and this topping phase could last into May next year perhaps. My first thought here is the US presidential election could be relevant here. I have also been talking about this being a war cycle of 56 years, and the current war cycle is topping now in the next 8 years, and the world is very dependent on the protection from the US. And should we, well, I would say both candidates in the US are questionable, but a president that would draw out from this protective role in the world, that could be a problem with Russia and Europe. But anything can happen here. I wouldn't speculate if the US and the election would be the big problem. Anyway, if we see markets being very hesitant before the election, and you remember when Trump got elected last time, markets soared, they rallied, and everything was great. And same thing, if we get Trump re-elected and a lot of hesitations ahead, we could have sell the rumor and buy the news, and I think it would be very negative if Trump gets elected, but we could see markets rally again after that, and we get this choppy sideways market being not very logic. But in the end, I think there will be some trouble on the horizon. I don't know, it could be anything, debt related, China. Anyway, looking for a correction here in this spring, a rally into the fall, and then we get a 6-month period where anything can happen, but it will end with being a bull market top. Yeah, see ya!